This video is going to be kind of an in-depth update look at the US dollar, its relationship to the euro. It's going to talk a little bit about price patterns and also related sentiment data on the currencies. This is a weekly chart of the euro versus the dollar. So this is like an upside down chart of the dollar. This is showing the euro's value. And you can see the euro is in a long-term bull market, higher highs and higher lows. And as of last July, we had this huge decline in the euro, a huge increase in the value of the dollar. Uh, since that time, we've had this up down up pattern, and what I think is happening here is the first leg down in a bear market. This is probably a wave A of some sort of a pretty larger degree, and then I'm going to zoom into a daily chart and look at this pattern since last fall. So zooming in to a daily chart now, and this is last October and November, we had a really strong move up. We had a move down that was a little bit shorter than that move, and now we have a move back up that right now is at a lower high than that high. And what I think is probably happening here, this is probably an A, a B, and a C. I had suggested in a previous video this might end up forming a flat, but as of right now, I think that's probably secondary to this forming a triangle right now. So in which case this is still an A, a B, and a C, but instead of having a big move down now, you would expect to have a wave D and then a wave E back there. And I'm going to click over to a chart of UUP, which is a dollar bull fund, an ETF, and it's what I wanted to show here is it's the same basic pattern except upside down now, an A, a B, and a C. And as of this week, I think that this C wave is done. We've had a really explosive move off the bottom, and if we look at a MACD study under here, there was a bullish cross as of Friday on that fund. And the next thing I'm going to talk about is the related sentiment data on the dollar and the euro. Alright, this is a public opinion chart of the US dollar, and public opinion, this is really kind of like a sentiment survey, similar to the sentiment surveys for the stock market I talk about on the blog frequently. So this is not necessarily a real money gauge, but it's an opinion type of chart, based off of actual recommendations and that type of thing. So what we can see is that the public opinion is very, very low on the US dollar right now. This is a chart of the US dollar. The dollar's been dropping and public opinion has been really dropping with it. And if you just look at the chart, you can see that the public opinion tends to get very bullish at tops, and it tends to get very bearish at bottoms in the market. So this is a good contrary indicator. We know it's at a historically extremely low level. Right now it's about as low as it's gotten for the last several years, and it's also outside this lower green Bollinger Band, indicating this data is extreme, relative to the data from recent history. I'm going to show the chart of the euro as well. You can see as the euro has been rising, public opinion has really been rising with it. It's not showing the same type of extreme bullishness as the dollar is bearishness, but taken together, these things indicate that the generally dumb money public opinion type of surveys are showing extreme bearishness on the dollar and excessive bullishness on the euro. Now, I've clicked over to a chart. This is called commitment of traders data, and this data comes out every week for futures markets, and it shows how many futures contracts are being held by different groups of traders. It's broken into three groups, which are commercial traders, large speculators, and small speculators. The commercial traders are considered the smart money indicator. They tend to be good market timers, and they act logically. They buy when prices are low, they sell when prices are high, that type of thing. The large speculators and small speculators are both considered to be dumb money, and at least at the extremes, not necessarily in the middle of ground type of moves. And what this is showing is the smart money commercial traders are net long, and they are hitting this upper green trading band, so they're at an extreme level of bullishness on the US dollar relative to recent history. So that should tell us that the smart traders think the dollar is going to go up. We see just the opposite with the large speculators and small speculators. They both are basically at an extreme, below this lower green trading band, showing that they're both net short, and they are to an extreme degree. So all three groups of those traders are basically telling us that the US dollar should rise sometime relatively soon. I'm going to show the same chart for the euro. It looks almost the exact same but upside down. As the euro has been rising, the smart money commercial traders are getting net short, and they are so to basically an extreme degree the last few weeks. And we're seeing the opposite with the large speculators and small speculators. They're very net long, and they're near their upper standard deviation bands. So all this stuff taken together, the price pattern looks pretty reliable. It looks like that leg down of the current decline is done, and then we have all of this opinion type of data showing us that the smart money is getting bullish on the dollar, bearish on the euro, and the dumb money is extraordinarily bearish on the dollar, and they're also excessively bullish on the euro. So I don't know that there's going to be a extremely directional move over the next few months. If it ends up forming a triangle pattern, that would argue for some kind of violent ups and downs, but more of a sideways pattern for several months before the dollar would then go on to a larger upward advance, maybe next year, maybe later this year. The last of this type of data I'm going to show, this is all from sentimenttrader.com. This is a chart showing the US dollar index, so the value of the dollar, and then this down here is showing how much funds are going into, in this case, strong dollar type of funds, indicating that this fund will increase in value as the dollar increases in value. You can see that during the the winter, last fall and into the winter, we had a huge influx of money into bullish dollar funds as price went up, and we've seen that huge outflow of money back down to historically pretty low levels here. So this is another real money gauge showing that a lot of money, excessively so, has come out of the bullish dollar funds. And then if we click over to the weak dollar funds, we've seen there's been a pretty big, close to a tripling of the amount of cash that's gone into the bearish dollar funds since last fall, as the dollar kind of peaked out and went on this large up down type of phase. So looking at all this stuff together, I would say the case is really strong. We're going to see the dollar maybe forming a long-term bottom here, but at least forming an intermediate-term low. Probably has already, from my opinion. And that's all for the update on the dollar.